following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. And yes, polar vortexes may be shutting down all of Chicago, indeed most of the Midwest, most of the heartland of the country, but they can't stop the Option Block. We keep coming, keep bringing this show to you, whether you want it or not, quite frankly. It's coming to your podcast provider of choice, so be prepared. My name is Mark Longo from the OptionsInsider.com, as well as from this here Options Insider Radio Network, upon which many of you are listening to this fine program right now. And if you're not doing so, if you haven't discovered that, if you haven't subscribed to our great network feed in iTunes or Stitcher or Aha Mobile or wherever else you get your podcast of choice, then go do so right now. We'll wait. And while we're waiting, I will introduce the rest of my cohorts here on the old all-star panel. Starting off, we'll go in order of proximity today, especially because he has such a great connection today. He is none other than the Viceroy, a.k.a. Mr. Alex Jacobson from Options Express. Mr. Viceroy, welcome back to the program, sir.
Thanks, Mark. It's good to be here today, and it's good to be inside of the warm.
Yes, I'm looking right now. It is minus 10 here in Chicago as we record with a 23-mile-an-hour wind gust. So factor that in. It's going to be even colder with the wind chill, probably minus 20 or so. So, yeah, they're calling it Chiberia here, and it sounds pretty appropriate for what I've been seeing. The Options Insider HQ is right here on the river downtown. You can just watch just the gusts of frozen wind just blowing along the ice. And it is very Siberia-esque, I will say that.
Yeah, same thing out here in the burbs. It's the wind as much as the temp.
Speaking of wind, we are joined by the hot air master himself, none other than Mr. Andrew Giovinazzi, beaming in from the balmy, dare I say it, tropical state of Maine, where he is nearly 50 degrees warmer than us right now. So, Mr. Andrew, live it up, enjoy it before the polar vortex reaches you as well.
The hot air master. I've been called a lot of things, but never the hot air master. I'm going to have to add that to my list. My list of monikers.
That's quite a compliment coming from me, sir, because I know some hot air.
Yeah, it is warm. It's supposed to only be warm until about tonight. Then we'll freeze again like a giant ice cube.
I'm reminded of, that was that horrible movie, The Day After Tomorrow, where those giant, essentially, rings of space polar vortex are freezing everything, and you can run and hide from them behind buildings and things like that, and it was pretty ridiculous. Well, we're getting one of those in Chicago today, and soon coming to a neighborhood near you pretty soon there, Andrew, so enjoy. Speaking of polar vortexes, Uncle Mike is frozen out, it appears. Maybe he'll be able to thaw out and chisel away some of the ice and get on board later on. But for now, we're going to soldier on and keep on going right on into the trading block.
The trading block.
All right. right, welcome to the Trading Block. This is, of course, the portion of the program where we break down the day's worth of activity, the day that was, from a broad market perspective and from a very particular options perspective. And another day, another sell-off on the old street today. Not as robust as when we recorded last week, but still some interesting activity out there. Most of the major indices closing fractionally down on the day. S&P down about 1/4 of a percentage point. Dow down about the same, a little more. NASDAQ leading the charge to the downside and down nearly a full half of a percentage point, of about 18 handles or so to 41.13. VIX cash also taking a little bit off the top, down about 1/4 of a point to 13.56 on the day. Oh, and for all of you who love the date, we are recording today on January 6th, so you'll be hearing this tomorrow, January 7th. So bear that in mind when you're listening to all of these numbers. Senor Rock Lobster, aside from enjoying going out to the beach, I'm assuming, today, because it is so balmy out there in Maine, what else caught your eye in today's activity?
You would have been blown off the beach and then pelted with rain, probably to your doom today on the beach in Maine. What's going on? I find the lack of volatility in the volatility products very surprising. I know Alex and I made the great prognostication that we'll probably see possibly a single-digit VIX this year, but there are no buyers for volatility juice at all right now. Going into the NFP on Friday. And I'm trying to decide whether that is a significant tectonic type shift in the way people are viewing some of the events around these sort of grand government pronouncements or not. You know, it was a pretty reliable trade last year. And, you know, again, you never put too much on any one trade, but it looks like this trade, might have some legs, but we'll know after today. But just not, the market down and just the market for volatility seems like it's been bid up, sort of waiting for this. And everybody kind of running to hit the exits, and there just wasn't much to hit. And just very low, not much interest in buying juice. That's all I have to say. Or, protective type juice from people. So,
kind of a little bit of a replay of what we saw last week, obviously not to the same degree in terms of the sell-off, but still market down, and yet no one really heading for the exits from an options perspective. No one really looking to lift offers on puts. No one really worried that the end is near, that the sky is falling. And you're right, there is an added incentive to maybe pick up some juice this week because you get maybe a few days to do some stuff with some free gamma ahead of the non-farms, and yet we're not even seeing that. So if there was an environment where you might want to pick up a little bit, this might be the case, and yet we're not seeing that even in today's activity. So it is kind of an odd one. I guess the narrative has shifted, Andrew, kind of reflecting what we've been saying on the show a lot lately. There's nothing really to really inject any vol into this market, and so people are probably already writing off non-farms, and if they are going to do anything, they're probably going to do it at 259 on Thursday ahead of time, just pick up a little bit of protection for their back pocket, and that's about it, and the rest of the week is pretty much business as usual. At least that's what it seems like to me from looking at all the different activity going on today. An odd week. Yeah,
and it's coming off the holidays, and people are just, I'm trying to get the eggnog out of my head and stuff like that, and everybody had some extra snow days in the East Coast. Thursday was off, Friday was off, at least in New England. So, who knows? But at least for right now, the vol buyers they either got singed so bad earlier, or they're taking a bit of a breather. Now, again, that's usually when volatility gets to a total bottom like that, it does not stay there for very long. So I would not be surprised for the old reversion to kick back in and see some vol come back somehow. But as of right now, it is in, as Mark Sebastian would say, the toilet.
That's something we haven't even factored in. You mentioned the snow day effect, but a lot of the traders, particularly here in the Midwest, probably have the little ones swarming all over them at home today. So maybe there's no time to buy any vol because they're too busy chasing them around and watching fun cartoons and stuff like that. So who knows? Maybe that's playing a little bit of a factor as well, unless they brought their kids to work with them, in which case that would be just all kinds of crazy. Maybe that's what happened to gold today. Say someone brought his kid to work, and
they hit the button.
They hit all the buttons. Daddy, can I hit the gold button? Because we saw some crazy prints going up in gold. Too bad Tosaw isn't here to discuss this, gold being one of his bailiwicks, obviously. But it wasn't going on in GLD. It was going on in the big futures. And it's kind of funny, most of the narrative of 2013 was, look at all the errors, look at all the crazy just errors going on in the equity and index options land, the crazy prints, the bad order routing, all this kind of stuff, the technological snafus. And it looked like the future side of the fence was kind of sitting there saying, oh, look at us, we're not really prone to these same kinds of issues. And yet it looks like really no one is immune from the fat finger issue. And that seems to be what happened today in gold. We saw prints going up in a very short period of time. In the Feb contracts for gold, the futures were crushed about $35 an ounce. That's about 3%. They printed down all that in just 1 minute. They dropped from about $12.45 and a half an ounce down to $12.12. So huge crushing, right around 10:15 Eastern this morning. About 12,000 contracts traded in that time too. So that's a tenth of the whole day's volume in that 1 minute period. Just crazy. And of course, unlike a lot of the other prints we've seen in flash crash and stuff, those prints were good. The CME stood behind them. They said, you know what, we're going to halt. After this happened, we're going to halt for, I think, a couple of minutes or whatever the time frame was. It triggered one of their circuit breakers they built in. And then they let the stock go up again, or start trading again. The futures start trading again. And gold ended up, at least earlier in the session, it ended up on the day after all that. So a lot of noise. Someone just dumped a whole bunch of futures at a really, really, really painful level, it seems like. It's funny, we were just joking on, what was it, last week's shows about how, how easy it is to do things like move the Dow by accident. Pretty easy to move gold, it seems like, too, if you got your kids at work with you today. Were you watching any GLD action today, Andrew? This catch your attention at all?
Yeah, I did. I was watching the GLD. I actually had a little thing on for options profits that I couldn't get an alert out fast enough to sell some puts out. It was kind of a downer. It was untradeable, really. So
it was quite literally a downer. 30 handles down, to be precise.
And usually I would have, some sort of order out there that hopefully would have gotten filled, but who knows? It traded down there. And so, but gold has been awfully squirrely lately. So it wouldn't surprise me if we see a little more squirreliness out of that thing.
Yeah, these are those crazy days where you're right. Sometimes you have a flyer lurking somewhere. Maybe it's a gamma scalp. Maybe it's something you deliberately have working way down below. I don't know why you'd have one working randomly in gold unless you really saw a crazy fat fingerprint coming. But yeah, I mean, it is an interesting time. A lot of people actually are starting to curtail those in light of these types of crazy prints because you get such crazy fills sometimes that they're busted, or you don't know what the hell you have on for a couple of days because they have to adjust it, and it gets all kinds of crazy. But yeah, you're right. It's been interesting stuff. Alex, I know you were home at Casa Jacobson today, but any of your feedback talking to the desk, did a lot of customers, a lot of hand-wringing maybe over what's going on in gold, or probably the GLD side of the fence over at OX? Did you hear a lot of that today?
Yeah, I actually queried the desk. I have IM from home, so I queried both desks. And fortunately, we did not have any customer issues with, I guess it was both gold and one of the energy contracts where there was also what appeared to be kind of a fat finger mistake. So fortunately, none of our customers were impacted. But the desks themselves said it was actually a reasonably brisk day. And I got some metrics from the last quarter, and I'll talk a little bit about those in a couple of minutes. But no, we seem to luckily not have an issue with it today.
I'm sure a lot of our listeners want to know, Alex, what goes on in a polar vortex day over there at Casa Jacobson, in between recording the option block, obviously. They want a little insight into the life of the Viceroy.
Mostly trading, reading the email. I can VPN into my terminal in Chicago and watching Bloomberg. I lead a very boring life because on days like this, maybe I trade a little more than I would on days when I'm sitting at the desk. And my son's college, my son goes to the university in the city, and they were closed today. And my daughter's home, Lola, has not gone back yet. So we had the family home today. We ventured out in one of the vehicles, did a little shopping, but basically a very quiet day. No ambition to really run around or do anything today. And I think tomorrow I'm going to venture in and try to make it into the office. The issue isn't so much the cold. If you live obviously in the city, and you know this, Mark, it's finding the parking on days like today. You make it in, it's all good, and then all the parking lots are full. So quiet day, home with the family, sitting with the dog, the Viceroy hat, the cup of cocoa, and the slippers.
Speaking of funky slippers, we are now joined by the magic of Skype to one Uncle Mike Tosaw. Finally chipped the ice off of the one computer out there in St. Charles, Illinois, and was able to join us. Uncle Mike, glad you could join us in the midst of this great polar vortex today.
We are excited to be here as per usual, just looking out my window and not seeing much because it's all covered in ice.
I'm surprised you're not out hitting the snowmobiles.
Today it's even too cold for me to want to go on a snowmobile.
Yeah, minus 16 or minus 20 or whatever. Not exactly conducive to high-speed snowmobiling.
Yeah, you know, my thought is that what if something breaks down and I'm out in the middle of a trail somewhere and I have to wait for someone to come get me? That just doesn't sound like fun in 15 below weather.
Yeah, they were saying something on the news, I believe, the other day that in this kind of weather, your flesh will freeze in 10 minutes so or less. So, yeah, not you don't really want to hang out outside too long in this kind of stuff. But you actually have good timing jumping on the show, Uncle Mike, because we were just talking about that big fat finger print that went up in gold today. I'm sure that caught your eye and probably maybe lowered, I should say, your BBI today as you were watching the prints going up in GLD today as well.
Nah, not at all. Just a relaxing day for me.
So when these kind of prints go up in GLD, you don't scramble to get off any hedges or anything like that?
Well, it wasn't moved enough to justify doing anything. For anything that, because what was the because I'm not showing. Let me bring up my screen.
It was about 3% at the height of it. I think it was about 35 handles off the big futures contract.
Okay, because I'm showing a high today of 120.39 in GLD. Did it happen right at the beginning of the market?
Yeah,
today?
It happened about 9:15 this morning. We saw. Big sell off.
That wasn't enough to justify any hedge adjustments with me. No.
Here I am. I'm bringing you in. I'm setting you up to give you all kinds of great insight into what's going on in GLD, and you didn't even notice it. There we go. Uncle Mike.
Wasn't even on my radar.
So what was on your radar today aside from frozen tundra?
Well, you're just looking through a couple things today. Apple actually opened up way down today, and it was just really close to where I was getting ready to do an adjustment on a diagonal spread that I have going for a near-term financing hedge, so to speak, but I did not do it, and I'm glad I didn't because it came right back up. There's nothing more frustrating than making an adjustment and having it go against you right away, which is kind of goes to the adage that I really strongly prefer not to trade the first hour of the day because that's when a lot of chaos tends to seem to happen in my experience. And then with everything else, we had a little bit of a down day today, but on the stock side of it, but not really enough to do too much, so just went out and did a few naked snow angels.
Yes, that's a great way to celebrate the polar vortex day here in Chicago. Of course, you're right. Apple taking a bit on the chin this morning. At one point down nearly, not today, but net since they reached those China Mobile highs, off about 50 handles, nearly 10% since they made those highs, nearly hitting the 580 strike roughly. Yeah, trading today down at one point down to looks like about 533. So yeah, taking it on the chin quite a bit. That China love is not really seem to be carrying them through much anymore. Maybe everyone's writing them off saying, well, maybe that's their big announcement for the next quarter or so. Of course, the electronics realm, there are a lot of big announcements coming, but not from Apple usually. The Consumer Electronics Show is coming up this week. We're seeing a flurry of announcements already from a bunch of big manufacturers in the electronics realm. Traditionally, Apple doesn't play in that game, so that might also be weighing on the stock a little bit too. All their competitors are out there making a flurry of announcements, and Apple's kind of just sitting on their hands. So maybe we'll see something interesting from them coming up in the near future. Speaking of interesting things coming up, people have been on Apple about a dividend because they would want someone to put some use to that ridiculous cash hoard they've been sitting on and just growing exponentially over the past couple of years. And we did see in general, not Apple in particular, but just in general, a massive hike in dividend payouts over last year. The data's coming in now for 2013, and dividend payouts were up a little over $4 billion last year. It was $8.4 billion in 2012. In the same period last year, it was $12.7 billion in dividend payouts. That comes from S&P. 885 companies raised their dividends, but notes that, and a lot of these were, of course, coming from tax incentives. But interestingly enough, a lot of those dividend increases also came from the tech sector. The tech sector as a whole paid out about 15.3% of all dividends in 2013, up from a hair over 10% in 2011. And financial services coming in second, paying 13.75. That a little bit less of a surprise. Financial services much more dividend friendly, shall we say? But the tech sector not so much. Tech sector usually likes to be fast, high energy, high growth, and not really worrying so much about the dividends. But tech apparently paying out the dividends last year, so it was a good year for people looking for some dividend income streams. You had a lot to chew on. And speaking of, well, we talked a lot about the polar vortex hitting the Chicago markets. Maybe this will finally be something that will kick in and kick the snow market back into high gear, or I guess maybe even first gear. It's been pretty much in park. There was not a single snow contract traded in any of the exchanges last year. There might have been some OTC stuff, obviously, but of course, last couple of years hasn't really been heavy snow, so not a lot of municipalities and others looking to go out there and, let's say, hedge their snow exposure. So the snow market, which is something that got really off and running. There's a lot of promise behind it. I know we used to trade it kind of jokingly on the floor at the CME or on the SIBO, and a lot of guys at the CME would make markets in that too. For snow futures, it was kind of a little quasi OTC thing we used to do ourselves, but not so much in the listed products. I know things like Chicago Climate Exchange. There was a big deal on those a couple of years ago, but now, not a single snow contract traded in all of 2013. Uncle Mike, I think you'll be adding that to your retinue here coming up in 2014, some snow futures.
This would be a great time to go short snow futures, in my opinion. We're going to sell the top.
I like it. All right, and that's going to do it for the old trading block, and now we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
Well, welcome to the block. This is the part of the show where Mark always runs over me every time I try to explain anything about unusual activity. I just had to get that in. Today, though, we're going to start with my fedora on and smoking hat. Fedora on and smoking pipe. I'm going to take a look at a couple of trades. First off, in Win, shares of Wyndham Worldwide Corp. At the time, we're up a smacking penny to 7.50, and the stock is already at the top of its 52-week range. And what I did see some pretty interesting paper going up on the Jan 70 puts for very small prices, around 15 cents, about 889 traded in a block at the time. What made it interesting is that block actually kind of scooped the bottom. Almost a little over 4,600 contracts traded prior to that. Prices down from 20 to 25 cents, where there were some sellers selling out of the money puts. And then it looks like with the last seller at 15 cents got scooped up in pretty good size. So why I think this might be why I thought it was an odd trade anyway, was, okay, the market's not looking so great. And all of a sudden now you're selling some puts that can expire next week that are only $2.50 out of the money for 15 cents. So I found that to be, at minimum, kind of a risky trade. There wasn't a whole lot of open interest either. So, I understand it's a hotel company. There's not a lot of volatility in it, but for the same thing, that's that I would say selling those puts down to 15 cents, that's a pretty large sale. Now, you never could tell what anybody does, but I just found that sale to be, let's say, curious in the least. The only real thing I could think of is if somebody really wanted to take delivery of the stock at the 70 level. So in kind of an odd trade for that much, sort of loading up that much risk when the market's at highs. And what I think could be a closing put trade in SBAC or SBA Communications Corp. At the time, the stock down a quarter to 87.56 on the day, and another stock at the upper end of the 52-week range, as many stocks are, because we are at all-time highs, as Mr. Tosaw likes to remind us on at least a show-by-show basis. So what happened is paper traded around 7,281 of the 85 level puts for 20 to 25 cents. There's usually only trades around 720 contracts a day. Now, on the flip side of this, there's about 2,281 contracts open. So so in this particular case, it was mostly small to mid-sized blocks of paper, trading these puts. And it's either, I believe it was kind of closing paper, maybe bought some protection with sort of time running out until the end of next week when these expire. Maybe they're just taking their insurance and they're going away. Although it did have kind of the flavor of the wind trade. So something it'd be worth – right now it looks like closing, but I would check the open interest. Obviously, when you hear that, check the open interest today, which will be Tuesday, obviously, and see if that OI goes from 22.81, and effectively doubles from there. But again, I can understand the closing trade. I would not be able to really understand the opening trade unless you want to own the stock and just think that there's low probability of these shares ever being put to you at that level. Let's see what else we got here. Okay. An interesting trade in EWJ today. So we have the Japanese ETF, the MSCI Japanese ETF, pretty popular trading product. Trades around 32,000 contracts a day, so it's a little active for the odd in general. In this particular strike, there's just around 19,000 contracts open. And paper did sell the March 12 puts at 38 cents 50,000 times. So it's a pretty good-sized block of paper, pretty good-sized block of risk going out till March. However, these were marked as a buy right. So what that would be is the customer would be selling puts, possibly selling stock. Again, I don't know why you would sell puts and buy stock. It doesn't really make a lot of sense to me. So the customer effectively is putting on some kind of front spread or sort of short gamma type trade around the 12 level. And, the Japanese market's been on kind of a tear. It might go with the theme I've been seeing for the last couple of days of volatility sellers kind of coming out of the woodworks. Maybe Alex and I might be right a little early and we might see some extreme markdowns in volatility. But at least for now, I think that is in what is has been a volatile market for at least 2013, selling some puts that far out on an opening trade like that, again, I think is a risky, and basically it's very bullish on the fact that the EWJ just is not going to move very much, which I have a hard time believing, but maybe that'll happen.
That's the second time in as many shows that we've seen big put trades going up marked as buy right, which is kind of interesting. That's something you see very often, and also always another reason why I'm so sometimes dismissive of those trade descriptor tags, because they kind of just lump it all in there. Because you're right, buy right doesn't make a hell of a lot of sense with this trade in particular.
No, it's like, I would guess it should be just like a tied to stock trade,
Yeah, maybe they need to update their flags, just tied,
Right, just tied to stock. But I don't know how, you would write, I guess somebody could buy and sell these and just get long. So very interesting type, though. It's sort of, to me, again, most of it's on the put side, sort of strange volume. just selling options for not very big dollars. I think statistically, at least the first two, probably aren't a huge risk, but, with the market not looking very good, I didn't like the trades per se, but it doesn't mean they won't work.
Andrew, do you think it's generally ill-advised to sell very long-dated premium?
Well, it depends what the intent is. So if you're selling like options in March, like what are you selling really? If this guy's selling this versus stock, which apparently the print went up as some sort of, he's basically selling the March 12 saddle in the EWJ for, what is it? Probably around 76 cents or something like that. So if that's what you want to do, that's fine. My problem is I would prefer to sell long-dated volatility when volatility is pretty high. It just is not really that high in the EWJ right now. I mean, it's a fair level, but, it's not in the 20s. I'd say it's just kind of at a middling level. So the thing is, I hate selling volatility and just watch it go up right away, right afterward. And that's, I tend to be more of a seller when the vol starts to drop and not sort of when we're kind of hanging out here not doing anything. So it's more like the timing of the vol sale. So you could sell juice everywhere, but if implied volatility goes up, the negative marks start happening right away, and you don't collect your theta, and you get a lot of bitterness and anger, and you're not happy. So,
yeah, you're right. I'm looking at the look at the term structure here for EWJ. I probably would rather go out to Feb. It's about the same implied volatility level, but you're giving up a whole extra month selling March for I think like 6 extra cents. It doesn't really make a whole heck of a lot of sense the way he structured this one here. It's kind of interesting one. Maybe we'll have to flag this one to be continued to watch it down the road and see how this guy's line in the sand here has fared.
So I don't know if I answered Alex's question or not, but that's how I see it.
As usual, he gave your politics answer.
I gave my politics.
A question with a question. I like it. All right, since you're doing so well, I don't mean to interrupt you, sir. Take us home with VXX here.
Did you hear my intro? It was pretty good. I said, this is the part of the program where Mark usually talks right over me all through it.
I like it. Because it's totally true.
All right. Anyway, the last trade here, and this is really what I think what started the day off, is a call seller in VXX. We have VXX is trading near the bottom of the range for the product for the last 52 weeks. And paper traded 8,800 to the Jan 44 calls for an average price of 86.5 cents. It's a huge trader, almost 300,000 contracts, and the open interest on the strike was at 12,000, almost 13,000 contracts. And so we have that block of 8,800, but 11,000 traded at that time, and I'll bet you we're way over the open interest by now. Looking at that call sale, and basically the call sale, what got my interest was they kind of hit the bid, and then the balance of the puts or the calls traded through the bid. So it was a pretty aggressive exit for the volatility at the time, which I thought was like, wow, that guy wants to get out, and he did. And it turns out that the sale wasn't too bad because they're trading about 20 cents lower than that right now. So it looked pretty smart. So the guy gave up a half a cent just to get rid of his, almost 9,000 calls. And he pretty much caught the, the high of the day on it for that contract. So, it could have been closing a position, basically sort of a bullet position, and then they're looking at the writing on the wall, and they said no. And the volatility on that in January expiring next week was down 7 points, which is a pretty huge chunk. It's about 20% of the overall volatility got smacked, which is a big number for VXX. You have volatility now in the high 30s. So, pretty sizable bets that volatility is going to hold up in the vol products, and that the vol products themselves aren't going to maintain, the current levels. So some money is starting to sell that, and they're selling that pretty aggressively, and the bids are dropping away. So I thought for an odd block, it was kind of a telling early salvo into selling the juice, and they were there early, and they were right, because the ball's getting smeared in all those products.
Well done, sir. I'll have to step away more often. You did an able job of shepherding us through the odd block. But now it is time to keep on rolling with the old juggernaut that is this show, and time to roll right on into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, listeners, this is usually the portion of the show where Mr. Alex takes the reins and gives us the guided behind-the-scenes tour into the land known as OX. But he's going to do it via remote today because he is indeed beaming in from Casa Jacobson. So, Alex, in the middle of your shopping trips and your mani-pedis and all the other stuff you had going on today, what caught your eye over there in the activity unfolding at OX?
Hold on. Let me just put the masseuse table away. Talking to the desk today, there were three names that are just becoming perennial favorites, and there were Apple, Twitter, and Facebook. Twitter got a downgrade today, and that hurt the stock. But another name that was active today was Solar City, which got a fundamental upgrade today, which kind of the character of the OX customer is they're kind of more momentum driven. They're kind of more oriented towards premium selling. So it was a bit unusual to see two fundamental changes drive some of the volume. As I mentioned, I also got metrics for the last quarter of the year, and a couple things that come out of the metrics is, number one, it was a good quarter from both the standpoint of customer accounts in terms of how accounts performed. Of course, it was a good quarter in the market, and that kind of makes sense, and especially to our clientele, where, as I said, a good portion of the business is premium selling, and not having any really awful periods in the market helped that. But it was a good quarter from the standpoint of volume for the industry, and as we talked about in the last show, the industry actually closed up a little bit for the year. The other thing in the character of what I heard from the desk today, and this is kind of why I posed the question to Andrew, is we're seeing people move out along the expiration curve on the long side, not so much on the short side, but on the long side. And that's traditionally been a real bullish indicator for the market. I think I'm giving people a peek under the curtain here, but traditionally when our clientele goes a little longer out on the long side of the market, that tends to be a precursor to pretty good markets. The other thing that came up today is just the lack of volatility. And as Andrew said, if you look across asset classes, almost every asset class that has a volatility measure in it is at a decade or 15-year low, ended the year at 10 or 15-year lows. The only exception, the only asset class that's actually had a little bit of a pump in volatility has been U.S. government debt, surprisingly. Maybe not surprisingly, but lack of volatility, and we're seeing our customer go longer dated and buying premium, which kind of fits. So that's what was going on today.
Thank you for that, Mr. Alex. And you're right, Twitter lighting up the tape again today. It's been a crazy, wild ride this last week or two for Twitter. They've been averaging, about 187,000 contracts a day, doing about 250,000 today off of that downgrade. So just lighten up the tape. Looking at the strikes here, particularly in front month in Jan, it's just, thousands on pretty much every relevant strike here across the board. So people playing here in Twitter, and it seems like I think we'll be talking about Twitter for quite some time, particularly as we get into things like trading patterns and things like that. The OX clientele certainly seems to have its teeth into Twitter, and they don't seem to want to let go. All right, and now it's time to keep on rolling right on out of the Express block and right on into the Strategy block.
The Strategy block.
All right, listeners, this is usually the portion of the show where Uncle Mike comes on down from on high with his stone tablets and smoking jacket. I think he may have traded the smoking jacket for a smoking parka today and some heavy gloves and some long johns and everything else because it is indeed quite the frozen tundra out in your neck of the woods and indeed down here as well. I'm glad you could horseshoe your way onto the show today, Uncle Mike, to dispense some options, wit, and wisdom. I'm sure your minions are frozen in. Mine certainly are, so they haven't really informed me what you're going to be talking about. So I'm letting you fly fast and loose, sir. Do not make me regret it.
Gave the minions the day off, and we're advanced here in St. Charles. We don't horseshoe places. We snowshoe places on days like today. So just to clarify that. I want to talk about something I had a conversation with a client a while back, and there's a debate that goes on about should I pay off my house or should I not pay off my house? Is it good to keep a mortgage so you can get the tax deduction, or should I pay it down? And the quick answer to that, before I get into any detail on just some thoughts that I have on the matter, is like anything, it depends on your individual situation. For some people, let's say that your mortgage would be so high that you wouldn't get a tax deduction on it anyway, well, then that adds a different realm to it. But let's say that you have a $100,000 mortgage, let's say, just because we know that the interest that you would pay on that, you would get to deduct the interest on it. Should you pay it off? Well, I like to have kind of a different perspective on things than the traditional financial world. And I have some clients that I've advised to pay it off, and I've had some clients that I've advised to keep it. Now, what would be a reason with which you would want to pay it off, and what would be a reason with which you'd want to keep it? Well, the first thing that I like to tell people is that, are you investing in stocks? And if you are, let's say that you max out your 401k, you max out all your IRAs, you max out all of your potential qualified things with which you would get a deduction on, or a Roth that you would get the deduction on when you take the money out, whatever the case may be. And let's say that you're investing in stocks. Well, by doing that, you're trading on 4% margin or 4.5% margin, whatever your mortgage rate is. So with that in mind, then are you comfortable trading on 4% margin? That's a question that I ask people. Now, after that, and the reason that I say that is because you could get the 4% guaranteed rate of return by paying off your mortgage. And if that's something with which you're comfortable doing, that's fine. Once again, this is kind of like religion and politics. This is a very deep-seated issue with a lot of people. So I just want to give you a different perspective on this. Now, with that being said, you might say, well, but Mike, it's not 4% margin because it's tax deductible. Well, guess what? Margin interest is tax deductible as well. So it's kind of a tit for tat type of thing. Now, the next question that I like to ask people is, let's say, okay, you wouldn't want to trade on 4% margin, or you're not comfortable trading on margin, so you pay your house down. Well, great. I want to get some upside. And yes, I'm getting this guaranteed 4% thing that you talked me into, but I'm still bullish on the stock market. What can I do? Well, I'm sure you have a little money left somewhere. And if you don't pay down all the mortgage if you still want to get some type of an upside. There's this magical invention out there called the call option. Now, of course, you need to manage your risk a little bit, and you need to make sure that you're on top of things. But by using a call option, you have a way of, instead of taking that $100,000 that you were going to invest in a stock, a mutual fund, whatever the case may be, you're taking all of it, or at least a very big chunk of it, paying down your mortgage, and then you have a smaller amount at risk by using a call option. So that's another perspective with which I like to take on it. Now, we still do have interest rates do still exist. I know a lot of people think that they don't exist, but they really do exist. They're not very big by any means, but they do exist. So let's say that you're trying to do an interest rate arbitrage play, meaning that you're keeping your mortgage intact, paying 4% on your mortgage, and let's say with your tax deduction, depending on what tax bracket you're in, let's just say the real mortgage rate that you're getting because you get to deduct the interest is really 3%. And you're thinking, well, okay, Mike, I like this because of the fact that I can take that money at 3% and then I turn around and invest it in a 30-year treasury or a 30-year bond of some sort, maybe a municipal bond, maybe a cash value life insurance policy, some type of tax-favored instrument to where I'm getting 4% on. So I'm creating 1% out of thin air, so to speak. Well, that's fine, and I totally can understand where you're coming from on that, and there's something to be said for that, but allow me to present the other side of that. What if the bond or the tax-deferred instrument that you have goes down? My question would be, would you use margin to buy this bond fund, this tax-favored instrument? Would you do that? And if the answer is no, then I really don't think it makes sense to continue to keep a mortgage for the purpose of getting this tax-favored interest rate device or product for the purpose of trying to arb interest rates. Now, let's say that you're thinking, well, Mike, we have such low rates right now with interest, and interest rates are only going to go up. They won't go down, but they're only going to go up. I need to just keep paying this 4% for now because I think that interest rates are going to go up in the future, and then I want to be able to make some money off of that. Well, here's what I would say to that. If you're that convinced that interest rates are going to go up, then short the bond futures or do some type of a put strategy on the bond futures. Once again, this is a different answer for each individual person. But what I want to let you know is that there are alternatives. Keeping a high mortgage is not the only thing with which you can do. There's other ideas for it. Stay open-minded. And that's one to grow on for today. Now it's time to get back into my igloo.
All right, Uncle Mike, thank you for that wit and wisdom on mortgages and the opportunity costs lurking therein. A lot of people not really thinking about those too often, so a good reminder on that. And now it's time to keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, a portion of the show where we break down what we're watching for the rest of this week. And Andrew pretty much hit the nail on the head at the top of the show with essentially, non-farms coming up later this week. That would be Friday to be precise. We also have some other stuff cooking. We had some factor raiders and the ISM going on today. Some of the ADP numbers coming out on the 8th, which is Wednesday. Petroleum status also on the 8th. FOMC minutes, FOMC also on the 8th, and then jobless claims there on the 9th. So a few numbers in the old hopper this week, and yet everyone seems to already have pretty much discounted all of them. As you said at the top of the show, no one's really scrambling to buy any premium, to hedge anything, even in light of the relatively successive sell-offs we've had in the marketplace over the sessions here in the new year. No one's scrambling to buy any premium. No one's scrambling to hedge not all of the hallmarks, or even buy some premium to get some free days to do some stuff. I know, as Andrew, you like to say so often here, going into things like non-farms, get a few days of free gamma and see what you can do. Not even really doing that so much in the markets today. So it's kind of weird stuff. So maybe, Andrew, we'll start with you. I'm guessing pretty much non-farms is the one big thing on your radar for the rest of this week.
Yep. And I mean, it is the big single event. I guess we'll see if the volatility turns around at some point during the week. I did like Alex's idea on some strategies for people starting to buy some longer term at the money. I just assume when anybody says longer term, they just think they're just going to sell a lot of long term stuff. But yeah, I mean, I think there's the low volatility market brings a lot of opportunities. So unless something drastically changes in our world, I think, still 2014 still will be okay. But I'm looking for, some, I guess, things to buy as well. So, but not a lot I'm not too excited about much short-term happenings for this week. I have to be honest with you.
Yeah, not too much really moving the needle. Even non-farms, really, no one's getting too bent out of shape about that. We'll see as the week progresses if that's still the case. But for now, at least, no one's scrambling to put on any premium ahead of any of the developments coming up this week. Mr. Alex, what are you scrambling to put premium on ahead of this week, and what do you keep an eye on for the rest of this week, sir?
Now that Andrew, Mike, and I have reiterated how complacent everybody is, it occurred to me I think I'm now panicked. So
you are the canary in the coal mine, sir.
Yeah, it's the more I listen to this, the more I remember every time I've heard this and what it means. So this could be genuine complacency. Earnings this week, Alcoa, normally a big deal. I think in this environment, to Andrew's point, there's not a lot of news coming in that's going to be a big deal. The ISM number today was disappointing, and I always think ISM is one of the probably the better indicators. It doesn't get adjusted, and I remember I had a finance prof who said one of his two top indicators had to do with payroll and ISM. So I think with the freeze on, it's still going to be relatively quiet this week. I don't think Alcoa, even if they come in with an unexpected number, is going to move the market much. I think we need to get another week or two into the year under our belts before we see this market picking a direction. So not a lot going on.
Yeah, Alcoa, not traditionally a big name for options traders. Doesn't seem like that's going to really change this cycle as well. Trading about 10.5 right now. These $10 puts in Jan, only trading for about a dime. Not exactly a lot to entice premium sellers there. In the rest you have 9 puts. Obviously, those are worthless, so not many strikes to play with out there. So I'm guessing not too many listeners are going to be diving into the fertile realm of Alcoa in a couple of days, but they are reporting on the 9th after the close, so kicking off the quarter as always. And last but not least, Uncle Mike, what are you watching for the rest of this week, sir?
Well, the rest of this week, for the most part, like everyone else, we got non-farm coming up, but what I want to really emphasize, what I'm looking at a lot throughout this month is, yes, Apple does have earnings towards the end of the month, was that today or is it the end of the month? I forget.
Those minions are failing you again, sir.
Something like that. But anyway, what I like to watch with Apple is a lot of times is not necessarily just the earnings announcement, but the action before the earnings announcement. That a lot of times can be quite interesting and quite lucrative if you're on the right side of it. So that's something that just with the movement of Apple today, I think that we can see. I'm going to be watching for a lot of days like that coming up over the next few weeks, and I think it'll be exciting.
All right, and that is going to do it for the Around the Block segment. It's also all the time we have, unfortunately, for this episode of the Option Block. But before we go, as always, let me check in with each of my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods. Starting off with you, Senior Andrew, since you have the balmiest climb today, you get to go first. What is cooking in the land of the pit?
We have webinars on top of webinars. Mark will be doing a butterfly webinar, which you can register for if you go to optionpit.com/events. And we also have a bear market trading strategies webinar on January 25th. And I recommend both webinars, our virtual, our veritable webinar extravaganza, because mostly we get generally from our webinars, we get customers because people are actually surprised that we sound like we know what we're talking about. That's how I put it.
Unless it's the one I'm on, and people are like, what the hell is that Longo guy talking about? He's crazy. Never have him on again, please.
So generally our webinars, we actually work on them to try to deliver information that one thing about teaching clients now over the last couple of years and teaching traders before that is, there are certain things people want to understand, and we try to make that information as digestible as possible.
All right, and next up, good old Mr. Alex Jacobson next up on the hot seat. What is cooking in the land of OX for the coming week, sir?
Well, we've started the year off with a full webinar schedule. I'll just showcase a couple this week. On Wednesday, Jim Wyckoff doing his monthly review of futures. Jim is a gold bull. So if you want to hear Jim make his case or ask Jim some questions, that's on Wednesday. Thursday, just one webinar I'll showcase. There are multiple webinars every day. You can just come to the site, optionsexpress.com, click on the education tab. The webinars are free. You don't have to have a login. You don't have to have an account. Thursday, our well-received walk limit product, which has fostered a lot of growth here at the firm. It's still an exclusive product here at OX, but Thursday we'll be talking about new platform features and showcasing the walk limit. And other than that, everybody stay warm.
All right. And last but not least, Mr. Tosaw, let us know, please, when is the webinar train pulling into a station near us again?
Choo-choo. All right. For the month of January, on the 9th, is a Thursday night. It's kind of a busy night for me. It's daughter's birthday, it's my mother's birthday, it's my cousin's birthday, it's my uncle's birthday. For some reason, if you're a Tosaw, you have to have a birthday on January 9th, I guess. So I'm not going to have a webinar that night because I really don't want to. I'm sure with that mix of people, there's someone who I would tick off by having a webinar that night. However, on the night of the 16th, we will be doing a webinar on weekly options from yours truly. I'm going to describe how they have changed my life as a trader over the course of the last year or so, with the introduction of the 1 week, 2 week, 3 week, 4 week, 5 week weekly option cycles. I'm going to talk about ways with which I use them, ways with which they can be used for other people. I'm going to talk about the dangers of gamma. It's going to be something that I've put a lot of time into this over the course of the last year, and the big unleashing of a lot of the information we're going to have on this is on the night of January 16th. January 23rd, we do have another webinar scheduled, but it's not through compliance yet, so I have to keep my mouth shut on it. And then on January 30th, we're going to be having a webinar on portfolio margining. We'll be talking about the good things, the bad things, the medium things, the things with which you need to be aware, and just to help you determine whether it might be right for you in your trading. And that's the month of January. We'll be giving you more information, more promotions as we get closer to those dates. So stick around, folks. January is something we've been working on for a long time, and we are excited.
All right, looking forward to the great unleashing there on January 16th. Uncle Mike should be very interesting. And, of course, we have a lot of listener mail, so we'll get to that again next episode. You guys have really been knocking it out of the park with the listener questions. We want to make sure we get to as many as we can, and so we'll have a lot of listener mail coming up on Thursday's show. If you'd like to join your fellow listeners and make your voices heard here on the old All-Star panel, a lot of great ways to do that, including to celebrate the upcoming relaunch of our Volatility Views program. We're bringing back our Volatility voicemail hotline. It is 773-669-4VOL. That is 773-669-4865. But, of course, it's not just for the Vol View show. You guys can use it for this program, too. Call up, leave us a voicemail. We want to hear your voices. We want to hear what you guys actually have going on. So 773-669-4865. Leave us a voicemail.'re very curious to see what you guys have cooking. Of course, you can use all the other means you guys love to right now. Facebook, email, facebook.com/theoptionsinsider, email questions@theoptionsinsider.com. Of course, you can leave comments on the show notes on theoptionsinsider.com, or, of course, find us on Twitter, twitter.com/options. A lot of ways for you guys to get in touch with your favorite programs here on the Options Insider Radio Network. And on behalf of Uncle Mike and Andrew and the Viceroy and, of course, myself, we want to thank all of you guys out there in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.